Today we're talking about how I broke the #1 cardinal rule of day trading. Well, there's a few cardinal rules, but this is a big one. This is something that you should never do. Something that I've been focused on not doing, and today I really just blew it and ended up turning a winner into a loser. Talking about these puts that I was playing on, not talking about this trade that I made on Netflix today, how I went from being green to being red. Breaking this trade down for you guys and talking about why this is so important to not allow this to happen to you. Gonna break it down here in this video, so make sure you guys stay tuned. All right, what's going on, guys? It's Friday morning, and one thing that I hate about Fridays more than anything is having a red day on a Friday. And I'm going to show you guys this trade that I made on Netflix today and the overall setup and how I ended up being up almost $1 per contract on this baby, but still just could not lock it all down. Let this winner turn into a loser. What was I thinking, right? What was I thinking? Really, there's no rhyme or reason to this type of trading. Now, you can see on the chart here, I ended up buying these contracts at $2.90 there on Netflix today. These were the puts, $480 puts that were expiring today. Now, when the market opened, the price was $4.50. They sold off. They kind of broke back up here. I ended up buying there at $2.90. So ended up buying here $2.90. Well, yeah, $2.90 on this candle. $2.90 in this area. Buying there. The price then jumped up here above $4. I sold one contract there at $4.10. I still had two contracts left. Now, if we look at the actual chart here on Netflix, let's look at the chart, kind of show you guys the trade that I was looking at here. Netflix had a ER last night, big sell-off. They sold off below $500 there. So Netflix sold off below 500 here, as you can see. Netflix below 500. Yes, below 500 there. And basically was looking for Netflix to get below or get close to that 480 area, because you kind of had this, obviously the 490s. Well, the 490 was right here. You had that 500 level next. So we went from 500 to 490, and then, in theory, the next level would have been that 480. And if you look at the bigger time frame here, you can see kind of what I was looking at there as well. Now, a lot of times what I have seen in the past, what I have seen in the past with these types of setups is we get these big sell-offs after the news comes out on the ER. We get a little bounce back here, but a lot of times the stock kind of closes where, right in the middle of the low and kind of the middle area when they get a little bit of bounce back. But, not expecting this to kind of squeeze up, but more so just kind of looking for this to kind of just go sideways and then end up down there at the 480 area. And we got, what was the low? The low on that was 480, I think 485 area. The SPY kind of sold off for a minute and then kind of rallied back here. And as you can see now, we've turned that kind of 485 area into support, but then still even kind of rolling back off here. So this still might get down there to the 480 area. But what I want to talk about here is what happens when you let a loser turn into a winner. What's the point in letting a winner turn into a loser here, right? Now, at the end of the day, if we're getting into a trade and let's say, like I said, we're shorting, let's say, like I said, like this trade here, we're shorting and we think this is going to go back down. It's going to sell off, right? So at that point, it's like, okay, so this trade was like this. We had kind of this overall little bounce, and then we kind of continued selling. So ended up getting short once we kind of broke back below the VWAP there. And at the end of the day, the trend is your friend, right? So the trend is your friend. We got down here to the 485, 484 level. We touched down there. You can see kind of that doji forming there on the 5-minute candle, that indecision that was kind of right where I probably should have ended up covering at, because after that we kind of just rallied back up there to the 490 level. And like I said, at the end of the day, this was a great winner. I was up, I think, I was up close to $400 on this trade. I ended up taking one profit there, and then the rest ended up getting out. But look how bad this is, right? Look how bad this is. This is how bad this trade worked out for me. This was 290 entry, right? My 290 entry there. Where I put a stop on this thing because I was like, well, I'm just going to put a stop and it's going to sell, right? It's going to sell. Look how bad this entry or this exit was at the 151 area. Now, looking back at the chart and kind of why I put my stop, and that stop was right in line with that 490 level, and you can see it kind of just got right back above that 490 level once it found the bottom there. So I let a $300 winner, $400 winner turn into a $158 loss. That's just terrible management, risk management, trade management, whatever you want to call it. At the end of the day, I was like, oh, this is, Netflix is going to sell. It's going to sell. So I put my stop a lot wider than I should have, where on this trade all day long, on this trade, if I'm getting into this and I'm like, okay, I'm going to ride this momentum, why would I not just put my stop like right here at the $3 level, right? That would make way more sense. That would make way more sense, Patrick. If I'm in here at 290, I've got 2 contracts left. I'm going to put my break even right around that 3, even like 320. As you can see, that 320, this, like in this area, why would I put my stop all the way down here? Really overall, like I said, poor management. So to go from, I was up $100, right? I was up over $100 on this trade. I had realized locked in profit. I locked in $100 of profit. Instead of getting out for break even, I was greedy. I was emotional. I wanted this to go higher. I was like, it's going to push. It's going to push. I'm going to let it push. I'm going to let it push. I'm going to let this one ride. It's going to sell off. The market's going to sell off. It's going to happen. It's all these It's all these, this is going to happen. This is the idea. And at the end of the day, I end up getting out for a loss on this trade. So that's the mind-blowing part here is I get in good. I take a little bit of profit, and then I'm greedy because I'm looking for more upside, but instead we just sell off, and this goes back, like I said, never letting a winner turn into a loser, people. Come on, Patrick. This is textbook day trading, rules of day trading. Rules of day trading, textbook. In that textbook, it says one thing and one thing only. It says never let your winners turn into losers. Like I said, this was great. I could have taken, I probably should have just taken all 3 contracts there. But like I said, I was looking for a bigger winner, looking for a bigger runner. So instead of not me, taking all my profit at that point, I could have just put my stop loss there at the $3 area. That way, worst come to worst, I'm breaking even, right? I'm getting out for break even. And that's what would have been much better. I think what happened here is I ended up getting out because at that 150 area, I think I might have probably put my stop like in that. I don't know. I honestly don't know how I got stopped out at 150. I don't know what I was thinking at that point. I would need to kind of go. I think I need to go back and figure out. You know what it was? I don't know if I don't even know what I was doing there at the stop at the 150. It's really bad, really, really bad. Like I said, turning a winner into a loser, that is not good. Not good at all. And this is not just for options. This is for really any type of trading that you're doing. If you're buying here at the 290 area, the stock pushes to 4. You take a little bit of profit there at 4. Bam, take some profit. Well, you better put your stop, let's put your stop in these areas. Okay, we get a little bit of a pullback. That's fine. Really on this trade, I should have put my stop like right there at the 325. When in that 5-minute candle, you can see right there that 5-minute candle touched 325, the high there at the 410. That would have been easy, right? That would have been beautiful because I could have put my stop there, would have got stopped out there. You can see I sold pretty much right at the high of that candle at the 410, right at the high. The high of that candle was 420, so I pretty much got right out there. And then the stock ended up rebounding and going higher from that point. So Patrick, you gotta let your winners run. You gotta cut off your losers. You gotta not let your winners turn into losers. You know? No hoping and praying here. No hoping and praying. So, great lesson of the day here is turning a $400 winner into a $150 loser. So we were up 400. We could have got out there. We would have still been up probably $200 at that point, right? We would have been up $200 because we'd have got out probably around $200 in profit. If we'd have got out there at a break, just above break even, we'd have got out for $200. But instead of getting out for $200, I ended up getting out for a $150 loss. So there's a really good lesson here. If you get into a trade, it's green, put your stop, at least near break even at that point. At this point, from 290 to 410, I had plenty of room to put a stop at the break even point, right? Plenty of room, plenty of time to do that. But instead, I was greedy. I was hoping, I was praying, I was like, this is going to crash, right? But instead, I ended up getting out for a loss. And again, let's look at Netflix. Where are we at with Netflix right now? Netflix bouncing back to the 490 years. So it didn't sell off. It didn't happen. It's the story of my life. And that's just how it goes sometimes. So there it is, showing you guys the good, the bad, and all of the stuff that comes with day trading here. If you guys haven't already, do me one big favor, hit that like button, the subscribe button, all the buttons down below.